You just need to cycle through everything and see if there's patterns. And if you can... Hey everybody, so we have 10 stocks to cover. A couple of these are going to be shorts, and we're really just going to focus on what transpired this week and what exactly is changing and how we're going to profit from it. To start with, this was one of the top 10 ideas that we had, and we listed this in the top 10 video for April. Nothing has changed, but we're going to just highlight it here, and I just want to point out a couple things. You can see this right here pretty perfectly, right? So we came in today, we ran up earlier in the week, and if you followed that top 10 video, you did fairly well with it. Make sure you subscribe to the channel and click all notifications, because we do put out private videos, and you only see them if you get all notifications. Now, see this line right here? Once we broke that, that was it. We wound up running up. You can see the follow through, got right to the top of there, formed this wedge, came back down, tested. This is when they said they were going to exercise warrants. Forms this bar here. To me, this is a bullish engulfing. When this body encompasses that body, that's enough for me. I don't care about wicks. Wicks are what? Price rejection. So now we come up again, we touch it, we can't do it, touch it again. Everyone that's been following me for some time knows that when you flip an upper channel like this, these stocks can go parabolic. And that's exactly what we're setting up for here. We're setting up for a parabolic move. There's very little issue that you're going to have with this particular stock in regards to what's going on in the market right now. And that makes it very attractive. You don't have to worry about real rates. You're not worried about inflation. You're not worried about the war. Very simply, Black Rifle Coffee makes great coffee, and people really like the company, and they do some really good things for the communities that they support. So how do we get in this, and how do we profit from this? Well, today we got into the 30s for the first time since it's been a public company. So you're looking at roughly 30.50 is what you want to see. If you get over 30.50, this can go. Now, the easiest way to come out with a target price on something like this, once you're in a position where you really have nothing above you and it's thin, the easiest thing to do is just use Fibonacci level. So in our scenario, we're just going to take the high as it is now, which is going to be our swing pivot, and then we're going to take the low of when this came out and became Black Rifle Coffee. It's pointless to use down here because it's not really the same company. So you come right here and you look at these levels, and it gives you some understanding of where you're at. It's kind of interesting how you can see how we just, that 61.8% retracement and where that landed. But look up here. So this would give us a $35 target price. And this is a great way of establishing a target price if you're not familiar with other ways to do it. And if you just basically have blue skies above, kind of gives you a guideline. So you could see about 15 to 17% fairly quickly here. Now, land was one that we had in one of the top 10 videos about 4 weeks ago. And what I'm going to suggest is that when you look at these videos, that you keep a separate file. And in your separate file, you list all these top 10. And you keep 50 of them and you keep cycling through them, because sometimes I'm early. They're not always exact when I think that they're going to go. But based upon what's going on out there right now, this looks like it's going to continue to move. Now, there was a statement issued by JP Morgan today that they see a run on food and they see food shortages coming out. What this is going to do is this is going to increase farmland use. In other words, what land does is they lend farmland to farmers to grow. What this will do is this will increase the cost of that land because demand is going to be great. Therefore, this stock will continue to go up as long as there is demand for corn and wheat. If you're following this story, you'll notice that there are already what they're calling, quote, style riots in Iraq over food shortage and food prices. And now we had one the other day in Peru. So this is a much larger issue going on. That we don't have these kinds of issues. We're not seeing them, but they are out there. How do we deal with this? Well, we understand that where there's demand, there's going to be money made. So you look at this right here and you're looking at basically, let's just call it 4080. Flip over that and you could continue to go. We like looking up multiple time frames because it tells us where we are. You can see there's no more data. So we have nothing but blue skies above us. If you look at this on a weekly as well, you can kind of see exactly what's going on here. You had a cup, you never formed the handle, you just broke and you just went. So I think this has massive potential. And this is another one that if you're looking at blue skies, you could use fib levels. But when you flip an upper channel like we just talked about, there's really no point. You can just take from here to here and measure and realize that differentiation and that percentage, and then take the same percentage and flip it. So all you do is take the wedge line from that spot from here onto here and basically look at 25%. So you're basically looking at 25% on the way up. Make sure you comment on these videos. That's why I'm giving target prices. I actually read and respond to every single comment, and it's helpful to me because it tells me how to create content. I prefer to make content that everybody wants to watch. So corn. Now this is one that you've been following along in the newsletter, and there is a free version of the newsletter in the description below, link in description. We've been in this since $26. I don't see any reason to do anything with it. This is corn. People are focused on wheat. We're going to cover that. But you see this level right here? What you see coming across here, this is setting up again. And we popped over this. So what we want to do is we want to get an understanding of where we've been. If we know where we've been, we can kind of get a sense of where we're going. We can see these crosses. We can see the increase in volume that's been coming in for the past year for food. Now let's take a look at this. This was our first level that we cleared, and you can see how we responded emphatically there 2 months ago. Now you're at 27, and isn't that a coincidence how we just closed there, and now that is now the low, and now we've broken above that wick. As we know, wicks are price rejection, so then you just kind of keep moving it up and looking and seeing how you're doing through that one right up here. This would take you to $35. This may be an issue. So we're going to just watch that $29.50 level, but I think we're heading to this $35. I think we're going to get there fairly quickly. So this is a slow mover. There's not much to say here. Since we've been in this, it's just been a slow grind, but I'll take it. We're up 10% in less than 3 weeks. I mean, keep doing that annualized. You'll never have to work a day in your life. So it's solid money, and it just leave it alone. Let it do what it's going to do, and just let it grind. Along the same vein, these shortages are going to be in wheat. Now, I held off on this one today, and I haven't really gotten involved yet because I have this wick, and as we've stated earlier, we know that wicks are price rejection. So let's zoom in on this, and all I want to do is clear this long-legged doji. As we know, long-legged dojis are levels that need to flip, and when you flip them, you can find yourself in a position where they go much higher. If you overlay the indicators with this, you can see the 21, how it curled under it, right? See that? So that's telling you, if you use this as a demarcation line, best way to use this, are the bulls in charge if you're above it, bears are in charge if you're below it, there you go, boom. So basically you're looking for that 1054 and then you're looking for it to go. I see no reason why this is not getting back to the highs. And this is a really very simple trade. You're using this low as your stop. So you have 25 cents of risk to make $2.50 at least, right? So you're looking at roughly 8-to-1 with slippage. It makes sense to really look at this trade. If you take a look at something like this, you can see where we've been, and we weren't even in a food shortage back here. And you can see how these levels are kind of marked off. So it shows you the absolute massive potential for this. And if you look at this from a monthly basis, from where we were peaked to where you were in a trough, and you can see this level right here of that 983 and how you held and how you rejected that 1291 tells you everything you need to know if you get over this 1291. Following along the same vein, as we talk about food shortages, what we're going to see in countries that, with our first world problems, we're going to find ourselves in positions where people are going to run to the store and they're going to hoard. Remember what we did with toilet paper and how we overreacted? So you're going to see something very similar. People are going to start seeing what's on the news. The news does what? They like to put fear into us so that we go out and act, so that we're glued to the TV. You get it. So they start showing this on TV, the food riots, things like that. People are going to go to Costco. They're going to go to BJ's, which we're going to cover in a moment. And what we're looking here is we had a really nice breakout. You can see the line right here. Consolidated back, gave us Wick City. So we kind of backed off of looking at it. Broke above all those wicks, which is really what you wanted to see, and then the nice follow-through bar. What I like about this is I like this setup because it's pretty clean. There's not much that you need to do here. You just need it to act. So all we needed to really do is just break above that 607.74 level. If you can break above that 607.74 level, that's exactly what we want to see. And that can lead to some pretty massive pricing. Why? Because we've got nothing but blue skies. And again, if you really look at this, and just look at this channel, if you can get up and over this level, you can really move. Like you can have a massive move. And if you're going into recessionary times and you look at these names, this is when you buy them. You know, this one, BJ's flipped perfectly, formed a wedge line, broke out of that high tight flag, right? So here's your wedge line on BJ's, and then here's your breakout over the wedge line. Then you have a high tight flag. At the same time, you have that high tight flag. Look at this. I mean, look at that level. This could be in a textbook. It's so perfect. So what I don't like is I don't like that I have this gravestone right here. I don't like gravestone patterns. Now, I just think that was selling during the day, but nonetheless, doesn't matter. You know, price is price. Price pays, everything else is conversation. $71, flip that, and most likely we're going to test this level super fast. And that's what I'm expecting to have happen. By looking at the monthly, if we flip that level, all we have to do is understand that there's a massive channel up here. that can get us into the 80s pretty quickly. There are other names that are breaking out that have absolutely nothing to do with what's going on, and they're the ones that we should focus on. Why should we focus on those names? Because we don't have to worry about what's going on in the world. Very similar to Black Rifle Coffee. See, a lot of the trades that we're talking about putting on, if there are peace talks that are constructive, which we all want, the energy market and the commodity market will come in. So we need to find some ideas that are not tied to something that we can't control, right? What we're trying to do is find things that we can control. And this is pretty clean. This is LPLA. This was actually one that was in the pre-market live show. Someone else brought it up, and then I just put it on my chart and waited to see if it was actually going to do what it needed to do. And it did. So here's your wedge line, Wick City, right? All these wicks, breaks out above, runs right to this point. It doesn't get any cleaner than 196.59 as your pivot. Look at all this volume coming in. Look at the monthly on this, and you have nothing but air above. So that's exactly what we're looking for, these kinds of trades. And what we like about these is it's a completely different field. So they have 800 different firms with financial advisors that are independent. Now, these types of stocks, actually, these independent financial advisor stocks do fairly well, because when you go through a contraction of GDP, financial advisors that are with big firms tend to go independent because they get a larger percentage of their commissions. So this could be setting up for a much larger move, and I would put this on my radar. But if you break out of here, after you have this kind of trough, you have massive potential. And it's very simple, stop. All you're looking for is if you break this little wick and you're back in the wedge line, you don't want to be in it. There's no need to be in this, right? So you're using that 188.76 level as your stop. Now, we're going to just talk about what's going on. Pfizer. You're seeing the pharmas moved. Why are the pharmas moved? Because people are getting out of riskier assets. We're going to address that in a moment. Why are they getting out of riskier assets? Well, the first reason they're getting out of riskier assets is this. You're seeing the 10-year rise, right? And this money has been flowing into riskier assets. So you can see we're at 2.71% here. Now, this didn't matter for a bit, and now it does matter. Well, what's changed? Why is the bond market going up and that money not going into these assets, but seems to be going into some of these assets? See how this is holding? And that's because of some of the different sectors that are there. One of those sectors that people keep talking about is healthcare. And you can see what's going on here. Why is money flowing into healthcare? Well, the main reason behind that is real rates. And what you have to understand about real rates, we're just going to go over this very quickly. Real rates, you want to have a rate, when you have a negative rate, negative real rate, meaning rates are less than what's going on with inflation, people will buy riskier assets. When that flips, that changes. And right now, real rates are heading to zero. What does that mean? It means that's why you're seeing these runs in names like Pfizer. Now, this one's getting set to break out, and I'm going to show you why we're looking at that one versus this one. This has already moved. These are pharma companies. They're not tech companies, so they're not going to move like that, and they're going to be crowded trades. People that buy these kinds of names are not going to buy this that close off the base. What they're going to look for, they're going to look for the one that hasn't moved yet. I was trying to stay away from this because of the vaccination. I wanted nothing to do with that because I don't want any, that is my growth driver. But what will happen here is that won't be my growth driver. What will be my growth driver is people will want to put asset or money into safer assets. And so they're going to put money into this. Let's get rid of my 400 lines here and let's just talk about this. So in other words, I'm breaking out. Now I have a doji. It's the simplest trade. Now, these are 3-bar patterns. When these 3-bar patterns break, you can see another line straight like this. Do not wait. You just execute. 55.60 is what you would just execute. You don't think about it, and you use that as your stop. Gives you $1, right? I mean, when I talk, this is how I trade. So do what you want with it. It's simply an opinion, but that's what I would do. Put it on. If I lose $1 onto the next one. If I'm right, then I could possibly go here where the other pharma names have gone, right? As everyone plays catch up, and that can give me a return of roughly, $6. Well, $6 to risk $1, 6 to 1. I'll do 6 to 1 all day long. But let's stay with this theme so you can understand it, right? So the theme of SQQ and why we should be looking at buying this now. Well, the Qs just broke tonight. Literally, I'm filming this on Friday. So you can see that break right here. That is your first close below the 50 since you're here. If you go look at stocks and what's going on out there, you constantly, as an investor and trader, have to be looking for technical patterns. See how you broke the 50 and what happened after? Okay, you just need to cycle through everything and see if there's patterns. And if you can find a pattern, then you just look for it to replicate. Look what happened when it broke the 50 and how we went down, right? And anybody can do this, it just takes time. And you get faster with it the more that you do this, right? Because at this point, it becomes very, very clear. You can see this, what just broke the 50 for the first time, cloud computing stocks. Probably want to consider looking at shorting some of the software names, right? You kind of see where I'm going with this. But instead of that, what we could do is just say, hey, SQQ, did we make a higher high? We did. Here's the 200, very simple trade. I'm not worried about whether we break this, whether we get to here, whether we get to here. This will go up if this goes down, right? SQQ is a 3X bear ETF. Flip this over back 50 again and close over 50 and get out of the trade. Until then, if I make one lower low, right? 349.09 was the close. 348.50 is your low. One tick below that, it's risk on by SQQ. And then just move the stop up as this continues to come down. Lock in what you can. These are not long-term trades when you buy 3X bear ETFs. Just FYI, on the list. So Sarc, this is something that we were in the newsletters. I said there's a free link to it in the description below. But you see this level right here? 21, 50. Look what you flipped. Look how you closed. Very little to say here. Very little to say. Just like when you broke here for the first time and how this went down, I would expect this to trade the same exact way. So to me, this has the potential to get back to this 56 3/4 level. All you're looking for is use this as your stop. 48.5 is your stop. And you're looking for this to flip right here, 50.21. And you should push up to that level. You're at $2, so you're going to want to constantly move the stop up. Maybe you see this again if things get really bad. And if you want to just look at the underlying asset that is the bear fund for, you can see very clearly how we broke the 50. And since then, we've just been trending down. That's all I have for this evening. You might want to watch this other video. It gives you a really good sense of how to set up your chart for day trading. Everybody have a great day. Trade to win. Time frame. We are going to be using a 2-minute time frame. If you're not familiar with this, every trading platform has a 2-minute time frame. You just have to go in and change your settings. We are going to use a 2-minute time frame because based upon the movement of algorithms and high frequency traders, the 1 minute has entirely too much noise now. As always, we have to adapt to what is going on around us.